being run, all of those things are far higher than they were before the crisis. And there's no question in my mind that the banking system, the financial system is much more resilient than it was. And I think we try hard to look at that as the principal tool to deal with financial stability risks as opposed to using monetary policy.
So what does that imply as you potentially cut rates in the near future? Look, your colleague Lael Brainerd has suggested that easier monetary policy should come with more cautious regulatory policy around these things like countercyclical capital buffers. Do you agree? If you guys move toward easing, does that imply you need to be a little tighter on the kind of financial regulatory side?
So there could well come a time when we would deploy something like the countercyclical capital buffer. But let me come back to that. First, I want to say that we constantly monitor financial conditions, what's happening with leverage in the economy, what's happening with funding conditions and all those things. And we reach a judgment about the level of vulnerabilities in the economy, and then we tell the public what that judgment is. Right now, our judgment is that, on balance, the financial vulnerabilities to the financial system are at a moderate level, which is not to say non-existent, just they're at a normal level. There will always be vulnerabilities. And I would say, as I said at the beginning, I wouldn't hesitate to deploy the countercyclical capital buffer if the test for doing so is met under our framework, which is if vulnerabilities are elevated. So that's how we think about that.
Let's talk about the trade wars and the escalation of tariffs in the last few months. This seems to have weighed on your decision last week. I'm struck as these escalate. I think a lot of the model that some of us had for how tariffs and trade wars affect the economy may have been off as we see these go into effect. You think, okay, tariffs, higher taxes on imports, that raises prices, that's inflationary. We're seeing some countervailing effects. We're seeing commodity price drops that are deflationary. We're seeing a strong dollar. How do you now, as you guys sit around at the Fed trying to figure out how this is going to ripple through the economy, what do you see? What does it look like in your model? Especially, is it inflationary? Is it deflationary? How does all of this net out as you guys analyze this situation?
So I think standard thinking on tariffs is that to the extent tariffs wind up being paid by the consumer, that it represents a one-time increase in the price level. And that as long as inflation expectations remain anchored, it shouldn't mean higher inflation going forward, but rather a one-time increase in the price level. In fact, but you ask more broadly, how do tariffs figure into our thinking about the economy? The amount of tariffs that are in place right now is not large enough to represent a major itself, just from sort of a quantitative standpoint, a major threat to the economy. That isn't really the point, though. The concern is more around a loss of confidence or financial market reaction. Really, those are the bigger factors that can affect economic activity. And what we're hearing from our contacts in business and agriculture and all around the country, we collect the thinking of thousands and thousands of people every FOMC cycle, and it gets accumulated into something called the Beige Book, and then the Reserve Bank presidents talk about it. We've been hearing quite a bit about concerns about trade, uncertainty around trade, really, all through the course of the last year and a half, and those concerns heightened quite substantially as of the last Beige Book. In fact, the number of mentions of trade concerns doubled in the last Beige Book, the one for this meeting. So that is clearly something that's on people's minds, as I mentioned, and the effects are not so much. I would say that the actual mechanical effects on demand, what we've seen so far, is meaningful but not large. I think there's discussion of much greater tariffs, and I think that's where the uncertainty is, and that's where the concerns are on the part of business.
in your opening remarks, you mentioned the Fed review of monetary policy framework, kind of what is going to be the way of operating going forward. That's the question you and your colleagues are trying to weigh as we speak. I do want to challenge you a little on this. It sounds like you guys are committed to this 2% inflation target as the framework for what you do, and are considering kind of adaptations to try and make sure you hit that target in a consistent way. Is this just tinkering? You know, is there a case for something more radical, for really exploring some of these options people are looking at around getting away from the entire kind of Nehru Phillips curve concept, some kind of nominal growth target, a higher inflation target? There's some newer ideas around targeting gross labor income, something that's not the existing framework. How much are you guys open to something other than just playing around the edges of the existing 2% target, and how radical should we be in this world we've been talking about with low kind of sustained interest rates?
Well, I think it's too early to prejudge what the outcome will be. We're still in the relatively early stages of this. Again, to go through what I went through, we're having a series of events, public events around the country that are streamed on the internet, where we meet with all kinds of constituencies, the constituencies that we serve, really, to hear what they think about how the job that we're doing. Then we had this academic conference at the Federal Reserve Bank of Chicago. So we're putting all that together, and then we're going to begin shortly a series of FOMC meetings at which we will discuss all of the issues that are on the table and ways in which we can improve our framework. And this is always a good thing to do, but particularly now, though, with the effective lower bound problems, the problems of being close to the effective lower bound. In terms of the specifics you asked about, we've said that we weren't going to look at simply raising the inflation target. And there are a couple reasons for that. 2% has become the global norm among central banks. I think there's value in low and stable inflation, and some would question whether significantly higher than 2% would meet the statutory definition of price stability. I also think there are credibility issues. You know, central banks around the world are fighting hard to get close to their 2% objective from below. We're doing much better than most. But just saying we're going for a higher target, I'm not sure how credible that would be. The Bank of Japan did something like that a couple of years ago, and it didn't work. So what we're really looking at is not so much raising the target as looking at framework changes that will make that target more credible, that will allow us to symmetrically achieve 2% inflation, so that inflation expectations will be well and truly anchored at 2%. And the strategy, you mentioned the strategies. There's a
What's up, guys? Welcome to our live session. We've missed quite a few. Just been traveling, had to go to a wedding, but can you hear me? I hope you guys can hear me. So yeah, let's get right into it. We have a few suggestions in the chat, which is great. Right now, I wanted to just talk about Euro Aussie since I was looking at it. I see a nice little short we can enter. I'm just waiting for this 1 hourly to close. We broke this counter trend line, and I'm just seeing if we could close below this trend line with this current candle. Hopefully we can, and I could call out the Euro Aussie short in our signals. Looks good from a risk to reward standpoint. 1.18, perfect. Currently you're in CAD CHF. We were about 11-12 pips in profit. Right now we're floating at entry. Also looks like a good intraday setup. Hopefully that plays out. I had Powell speaking in the background. Let me close this. I had Powell speaking in the background, and basically what he said was, although employment rate is at 0.6, 1.6, and jobs are continuing to pay higher wages, the overall outlook is looking like they will be doing rate cuts, but they just don't want to jump ship right away. They're probably going to see next month or two. I believe he quoted, it's better to have an ounce of prevention than a pound of cure. So they don't want to make any harsh decisions just because of the global trade right now. Obviously the trade war is going on with them in China, and they moved away from making becoming closer to a deal to going further to maybe even further confrontation or added tariffs, etc. So it's not looking like a deal will be reached anytime soon, kind of piggybacking on what we said last week. So that's why I kind of wanted to short USD yen, and we've got about 50 pips profit. Right now we're floating around or near entry. Maybe it's just a retrace. I don't see any near-term support at that area. Let me just pull that up. But yeah, so we had a nice little descending triangle, and the descending triangle goes like this. So it comes down to here, 2, 3, and then fourth. And the fourth one, it tends to just spill over, which it did. It was a nice, very low drawdown trade, and we're just coming back to retest the support at 107.341. But overall short biases are still looking like a go. You should have closed off some profits by now if you haven't already. And that's USD yen. Someone said odd CAD. So fundamentally USD is looking like the same from last week, looking fairly weak. I'll show the dollar index in a bit. But odd CAD, I was looking at this. We were in this like descending channel, and we kind of broke above it, and we're just consolidating. Either the markets are going to react to this resistance and go down, or we could see a pop up to go higher for a nice swing opportunity, which I was looking at. I plotted this, I believe, last Friday, where we could have a nice long off support, off this nice support region that we plotted. We could have a nice swing long to our weekly trend line right here. So a nice long to appear. Given that we do pop back of this resistance at 0.91860. A nice break, retest, and rejection to the upside for 150 pips. I will be monitoring this. Currently we are in Euro Pound shorts, USD Yen shorts, and CAD CHF long. Euro Pound shorts are in some drawdown. Hopefully, not this one. Hopefully, it comes back around maybe tonight during the London session. If only I could find the chart. Okay, I guess that one will do. I don't know, it did not save. But right now, this is where we entered our short, right at this rejection. But the market kind of swung back up, and it's kind of flirting in and out of the channel. Luckily, we did run into some resistance at 0.89600. Hopefully, we'll respect that and come back down. This was a higher high at right here, and we made a lower low. Ideally, maybe this is just a lower high before we fall down further. We had resistance right above here, about 0.89900. So about an 80 pip stop loss. Because the price does have incentive to go to this trend line up here, which I'm gonna watch out for. If we do start getting into a higher drawdown, we'll start closing off some of our position. But this is a nice resistance, and we had some additive confluence from the pound PMI that came out. But we'll see how this plays out. But hopefully, it goes in our favor. Someone said gold. Gold is looking like a possible short. We just gotta see, like right now we just run into 1431. I called this long last week, but I also called us to get out. But it played out perfectly. I believe we went into about 35 pips into profit, and I just said let's cut it. Just because we had a nice week, and it was a weekend coming up. I didn't want us to be in the middle of any trade news that comes out during the weekend. But it was a nice trade. It ended up going to our take profit, which is fine. On the daily, it does look like a nice short. If we kind of scroll back to the 114.31, which was resistance before, and support, near-term support. So near-term resistance, if we go all the way back to November of 2010, we've spent November 2010 all the way to the early parts of 2011 just stuck at 14.31 and below, and we came back in July of 13, and now we're going to finally retest it again 6 years later. And we had a nice reaction to it. We're making kind of a teardrop candle right now. Earlier it was a teardrop candle. Right now it's just looking indecisive. By 5 o'clock it could either flip back up, or we could have a nice teardrop candle form again. So I'd wait for the daily. If we get a nice flip back up, longs are good to go to this support region. Resistance region, 1500, the psychological level. If we get a nice teardrop bearish candle, then we can have a nice short, at least to 1378 region, which would be great in terms of risk to reward. So if I do go gold short, which it is looking like, I'll let you guys know. Just looking at the smaller time frame, you can see the indecision, hammers, dojis, and now we're pursuing another hammer. So a lot of indecision, but ideally if this candle can close bearish, maybe somewhere down here, we could wait for a retest and then go short and get a nice 80 pip intraday move. So that's gold, odd CAD CHF. Let me look at USD CHF, which I called last week, which just spilled over perfectly. What a nice short. Counter trend line break, retesting a resistance at 1.100 psychological level, and we had a nice spill out. This is probably the quickest 60-80 pips you're gonna make. And then we had CHF long, CHF yen long off the ascending channel that's in, like this one right here. And I'm looking at shorts because we're back in the channel. If we can get some sort of rejection from this top trend line right here, maybe a nice short down to this part right here. Another wave of the channel, 1 wave, 2 wave, 3, 4, 5, and complete the 6th wave down here. So I'll be eyeing on that based on CHF yen possible shorts and CAD CHF longs. We're looking at Swiss weakness in terms of technicals, and that's that. I don't believe we have any major fundamentals coming out for the remainder of the trading week. Let me just double check for you guys. We had the consumer confidence, we have New Zealand later cash rate and the rate statement at 10 p.m. Eastern. We're not in any NSD shorts. If you are, watch out. Tomorrow we have good durable orders for USD 8:30 a.m. and some more NSD, which is fine. Euro USD final GDP, which will be major Thursday. Good. Just looking for current account. Okay, so yeah, the only major fundamental that concerns us is the CAD GDP Friday. Hopefully by then our CAD CHF plays out. And that's today's live session. If you guys have any other questions or pairs you want me to look at, shoot them now while you still can. Pound USD, what is my advice to look at that? I was looking at pound and I believe there was a setup there. Yeah, so there is a setup. I drew this counter trend line. So we run into some resistance at 1.27635. Just looking to the left, we've kind of been boxed into this, and we made a nice little push. It was a nice fake out. We came back down, and this counter trend line I drew about 20 minutes ago. We did get a break, and now we're kind of reacting off support at 1.26638. So if I get the drawing tool out, I can draw this kind of consolidation region right here. So this consolidation region we did spill out before in the early parts of June, but we've come back in that consolidation range. If we break past this 1.266, we could have a nice short somewhere down here. If we break above this resistance at 1.27600, we could have a nice long. It's all based on what we do, but right now price is just in a range. It could be a nice intraday long to go back up to 1.276. I just wouldn't go based on this candle, even though it's a hammer. Maybe wait for the next candle. If this is still a hammer, it'd be a nice intraday short. Let me remove this. So this candle right here, it's a nice bullish hammer. If it stays that way, you could have a nice intraday long to resistance, but we could also just spill out again based on USD fundamentals. And the lack of confidence they're showing, and rates cuts seeing as the viable option, we could have a nice long. Let me just pan the entries and stops for those that are interested. I wouldn't be calling this long. I'm mostly looking at Euro Aussie shorts and gold longs for later today, but you could possibly have something like this 1.78 risk to reward ratio for an intraday long for pound USD. That's what I see for the pound USD. Obviously, if we get a break below this, you can short it. But that would be my best advice, because we are in an uptrend. We didn't clear this lower low right here, this higher low right here, higher high, higher low, higher high, higher low. If we clear this higher low, then yeah, shorts are a go. Somewhere down to this region. But right now, look for intraday longs, given that this candle closes the way it is. Bitcoin, why not? Let's look at it. I actually like looking at Bitcoin. Technically, it's a bit better. It tends to follow technicals a bit better. That's probably because there's a lack of data. Most cryptos are new. Bitcoin passed 11K for the first time in I think all of 2019. Yeah, that's cool. Where could it go next? Just looking at near-term resistance right at 11,587 region, which we're coming to now. Could be a nice area to short off of. Could make a nice triple top and short. If you were in buys, it's probably not best advice to go into longs, unless we breach 11,580, and then you can just ride to some of these levels. But yeah, Bitcoin's looking good. Earlier in the year it was looking like a bubble. It was something like a burst. But looks like buyers are coming in. There's some trust in crypto, especially with Facebook starting to get into the crypto business and whatnot. So that's cool. But that's Bitcoin. You know, we're coming to resistance. Look for shorts, maybe some sort of reaction similar to what we had here. A nice doji evening star candle or a tiered up candle would be nice for shorts. And the first take profit for shorts would be 10,000, a nice psychological level, and then followed to 9,824 as a second take profit. But yeah, that's Bitcoin. We'll see you guys tomorrow at 11. I just thought today I'd push the live session further to 1:30 just because Powell was speaking. And yeah, so I hope you guys enjoy this live session. I suggest you guys see our previous ones just to get caught up on any levels you might be missing on your charts. Tomorrow we'll start at 11. Officially 11:15. At 11 I'll go live. I'll give 15 minutes for everyone to join in and send their questions and pairs. So I'll have those ready for this session. And that's today's live session. I will see you guys tomorrow. Have a great day and happy trading.